Good morning and welcome to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, the Dalal Street is all set to party on a Friday. It seems like we are going to have a kick-ass closing to the week. It has been a very good week, and why not? I mean, if you look at the Nifty futures on the XTX, they are indicating almost 150 to 200 points jump on Nifty 50 index this morning. These gains are definitely tracking the reversal that we have seen on Wall Street overnight, which was trading for most of its part in the red, but saw a sharp reversal towards the end of the day. Plus, oil prices will be something that we will need to keep our eyes out on. The OPEC has finally bowed down to pressure and decided to raise output, but it has raised output quite considerably. I mean, if you look at the outcome from the OPEC meeting yesterday, about 648,000 barrels per day is what the OPEC members plus some non-members have promised to increase the output by. This is in consideration of the sanctions placed on Russian oil output at this point of time by EU as well as the US. So although net it does not affect too much in terms of where oil prices might be, but this is a big victory for consumers, oil consuming nations such as the US and India, and goes that probably further lobbying could push Saudi Arabia and other OPEC members to raise output, given that they have enjoyed supernormal profits for the past 2 years, Santo.
Well, so CJ, this must be your turn to gloat, right?
Yeah,
you've been calling for a bullish market for quite some time.
Absolutely. I am hoping that probably, with this sort of a rally, we will probably be able to cross that 16,700 threshold, which has been a, very important sell zone for a lot of profit booking out there in the market. And it is also, importantly, the 50-day moving average for the index. So if we cross that level, then definitely 17,000 is in our sights.
Well, I can't dispute that right now, CJ, because clearly the market has given a strong pullback, and yet, CJ, I mean, given my cautious nature, I would still say that I'm a little skeptical, because look at the overall macro picture. Still. The government has said that it's most likely to miss its indirect tax collection target for this fiscal. Look at the trade gap. Its trade deficit has hit a record high of around $23 billion for May. High oil prices are clearly beginning to hurt. You're likely to see further increase in interest rates when RBI meets next week. That almost seems to be a given. So rates are rising. You've seen home loan rates rise, auto loans rates increase, which means that consumer sentiment is likely to be dampened. You're hearing about layoffs, across many sectors now, typically starting with the startup sector. Yeah. Okay, earnings are not in great shape. It was a mixed bag just about, and you're likely to see some severe dent for a few sectors like steel all in the coming quarters. So, I mean, what is all this exuberance about is, CJ, what I can't understand.
Well,
really.
Santo, everything that you have said is on point and right, but it's also old news now, right? All of this has been in discussion for the past, how many months now? And I feel that is where my optimism comes from. It's not like there is some new surprise, negative surprise that has come into the market. Investors have already started to price in a lot of these negatives in the price, and this is why we were at the 15,800 level not so long ago. The recent comeback has come on the back of some exhaustion, fatigue among the bears, definitely some short covering, and a possibility that probably the economy may not, inflation may not be a longer term concern. Maybe it will start peaking out, given that central banks are definitely now starting to get their act together. And even in India, there is hope. I mean, if you look at what Nomura and other brokerages had to say, they believe that inflation should start peaking out in another 2 to 3 months. And I think that is what a lot of investors are hoping for in India, at least. We cannot know what is going to happen in the US, but in India, at least at this point of time, they do not expect RBI to probably go as bonkers as US Fed is going on the interest rate front.
Well, that's it. Let's dive into the stock. But my last word before that, CJ, just 2 weeks back, the mood was highly bearish. Other than a short covering, nothing has really changed. But please go on.
Anyway, diving into some of the stock actions right now. The first stock on my list is Reliance Industries. The stock had a great trading session yesterday, rose more than 2.5% to 3%. And this is largely coming on the back of a renewed upswing in diesel and gas oil margins globally. If you look at the diesel cracks and gas oil cracks, which are two products that Reliance refinery is into, they have started another upswing after after a considerable fall towards late April and early May because of some easing in inventory levels, but inventory levels are starting to dip again in Asia, largely because China is coming back after the reopening of the economy, and there is expectation that demand is going to rise. So that is quite good. Plus, yesterday a Reuters report came in wherein it was suggested that private refiners in India have been very shrewd in their behavior in this quarter. They have been getting crude oil or raw material for them from Russia at very cheap rates, as we all know. But they are utilizing that crude oil to refine products and sell refined products to markets in Europe and in the US, and at a substantial premium. According to some estimates, they are making as much as $30 per barrel in terms of refining margins in the first quarter. So definitely a private refiner like RIL is in for a blockbuster earnings in the June quarter, and that is what I think the main theme here is. And if you look at some of the brokerage commentary also that came out post the RI's earnings, they largely indicated that refining is going to be the key driver of earnings growth for the company. And I think RIL at this point of time, as one of the brokerages said post their earnings, is probably a growth haven for the market and probably the best stock to be in given the current market volatility.
Well, CJ, hard to find fault with your argument. This is a very good season right now for refiners in general, and even if you look at the technical indicators on the charts, Reliance Industries is looking pretty strong. So even, let's say, if I were not to take a very bullish view on the stock, there's very little reason to go bearish given that all the tailwinds right now are in its favor.
Absolutely. I mean, even in other businesses as well, if you talk about telecom and retail, they are also recovering quite well. I mean, telecom itself is expected to see tariff hikes later this year, although there are some concerns that might be delayed because of high inflation environment that we are in. But generally, RIL looks quite solid, Santo.
Well, I'll have to give it to you on this one, CJ. The next stock on our watch list is UltraTech Cement. The company has said that it will invest about 12,500 odd crore in capacity expansion over the next few years. Now, the company is already on track to meet its capacity expansion of about 17 million tons for this year. It has a capacity of roughly 120 million tons that will go up to around 137 million tons in this fiscal. And over time, over the next couple of years, next 2 to 3 years, it eventually intends to take its capacity up to 159 million tons. Now, UltraTech is clearly signaling that it wants to be the dominant player in this market. There have been a lot of flurry of activity in the sector over the last 1 month, ever since the Adani Group has taken control of ACC and Ambuja Cements. So, UltraTech signaling its intent very clearly that it intends to remain market number one. The best part is that, according to Morgan Stanley, is that the company's balance sheet is in a very good shape. So, most of the capacity expansion can be funded through internal accruals. The brokerage has a price target of about 8,000 plus on the stock. This is clearly a stock I would keep an eye out for. Also, remember, such a big capacity expansion at this point also is a reflection of the company's confidence in demand for cement.
I don't think, Santo, I'll be as enthused as you are about the capex plan. For me, this is definitely showing that UltraTech is spooked by the expansion that Adani Cements is doing, or the Adani Group is doing after the acquisition of Holcim's India business. So they are trying to retain their dominant position in the sector. But the problem for me here is that they have indicated that they are going to do this capacity expansion both through brownfield as well as greenfield expansion. Now, brownfield is understandable. I mean, if you can acquire a competitor, then it is largely a consolidation of the overall capacity in the sector towards the larger players. But the greenfield capex is what concerns me. I don't think that the demand environment for cement is as good as UltraTech is positioning itself for. Clearly, there is going to be more pressure on pricing in the sector. If you look at the current levels of demand, the outlook on demand has become a little muddled this year because high construction costs are forcing a lot of developers out there to defer their plans or probably shut them down altogether. Now we have the monsoon season coming up, which traditionally has been a weak quarter for the cement sector. Apart from that, we have seen the government take action against certain sectors, right? Especially on the intermediate front, where prices of steel, other products that have affected the end user or end consumer, industries, the government has tried to bring in some relief. Now, cement is also an intermediate product, and let's not forget that the ministry has been after cement companies for a very, very long time. There have always been voices and concerns from the government of cartelization, of higher prices and whatnot. So I fear that if price hikes continue, as a report came out earlier this morning from Informist Media that cement companies are going to take price hikes in southern India later today, even though just to pass on cost, even though the demand environment is actually not that great in southern India itself. So that goes to show that there is a risk that cement could also come under government action in the future. But on the larger demand point, I just don't feel that there is enough evidence to support that demand is that strong for UltraTech to go so big on the greenfield expansion front. One stock where I'm a little bearish today, this morning, and probably one of the first stocks that I'm bearish on in a long time is Hindustan Petroleum. Now, I spoke about RIL.
You certainly seem to pick your targets with care. I think
absolutely. I mean, I spoke of RIL and the bull case there, but the same factors are actually a bear case for Hindustan Petroleum. The stock is expected to remain weak because PSU refiners are going to have a dreadful quarter in March, in the June quarter. They have not been able to raise prices in conjunction with the rise in crude oil prices. If you look at even when you talk about the import of Russian, cheap Russian oil, a lot of state refiners have actually not been able to do it as much because a lot of their own refineries are not geared towards, catering to Russian, the Russian grade oil at this point of time. Apart from that, clearly there has been some sort of messaging to keep, the end consumer at mind. At this point of time, according to Reuters, state refiners are running losses to the tune of rupees 20 per litre on diesel and rupees 17 per litre on gasoline or petrol. So that is a huge hit to their oil marketing business, and any upside on the refining side, Santo, is definitely going to be more than offset by the losses they are going to, or the under recoveries they are going to run on the oil marketing side. And for me, therefore, this stock is definitely one to stay out of or probably go short on in the near future.
Well, CJ, again, I can't really fault you on this one right now.
I am on top of my game.
Yeah, today. Okay. So, with HPCL, clearly the loss on marketing margins, on marketing volumes is the big dampener for the stock, and also its refining margins have not been all that great.
Yeah.
The only point I would like to make here is that look at the stock, it's fallen all the way from 300 to around 220. So the market may have priced a lot of it already into it. Also, you just mentioned that OPEC has decided to increase its daily production, which means that you could see oil prices cooling down a bit. That should certainly give some relief. So the kind of pressure that you saw on the stock, all the way from 300 to right now around 220, which now by the way the stock has gone to below book value, right? There is definitely value in the stock. So well, it's unlikely that the stock may run away, but I don't think it really makes sense shorting a stock which has already fallen so much.
Well, Santo, just be careful that the value that you're talking about is not a value trap. That's all that I'll say.
Okay. Lemon Trees is the fourth stock on our watch list today. CJ, the stock has rallied by about 20% in the last couple of trading sessions. Big move there.
Yeah.
Many brokerages are also turning positive on the stock. In fact, among the major hotel stocks, Indian Hotels and Lemon Tree is what most analysts were anyway bullish on. Again, a play on the reopen trade, and you had a slightly disappointing fourth quarter. That was only to be expected.
It was. I mean, given the run up in the stock, it was quite a disappointment.
No, because you had the Omicron wave in the fourth quarter, and that was only to be expected. But if you heard what the company's CEO had said on the channel some time back, very clearly this year Lemon Tree Hotel is going to double its revenue and also aiming for a 50% EBITDA margin, and average room rental as well as occupancy rate have both hit pre-COVID levels. Now, this company was hit harder because most of its inventory, most of its hotels were in the about 40% of its hotels were in the corporate and IT heavy geographies, because of which it felt the hurt the most. But now with businesses encouraging travel, business travel having picked up, you heard the aviation companies also say that this is one stock which is poised for a rebound. CLSA has raised the price target on the stock to 80 rupees and has a buy rating.
Well, Santo, the guidance is definitely quite impressive, but let's not also forget that this guidance is also coming off on a lower base. It's not like they're going to double their revenues from the 2019 level, or raise their EBITDA margins from 2019 level. So it's the low base that is making it optically look quite a great guidance in that sense. But for me, the concern is, of course, the occupancy rate. Although it has reached towards pre-COVID level, it still has seen sequential weakness, and that is something that I will clearly watch out for. Apart from that, the gross debt of the company still remains quite high. Even in FY22, they were leaning on debt to keep their operations running, and that is something that it might probably make the valuation a little, lower than probably sector leaders such as Indian hotels.
Well, the market has opened, the Nifty has opened about 138 points higher at 16,778.
Quite a strong start.
Yeah, and clearly mid-caps driving the
I mean, you look at the market breadth, Santo, about 1,700 stocks on the NSE are in the green right now, and about 150 odd are in the decline at this point of time. So that's quite a strong market breadth. We are seeing gains across the mid-cap space as well as the small-cap space at this point of time. The Nifty Mid-Cap 100 Index is higher about 0.8%.
Good strength in tech stocks also. Infosys leading the pack. The stock is up about 1%. Good strength in insurance companies also. Metal stocks are also higher. In fact, just about everything is up at this point.
Yeah, at this point of time, it looks like almost the entire Nifty, barring one or two stocks, are basically in the green. So quite a strong start, Santo.
The bear market rally is in full swing, I would say.
Oh, come on. This is the end of the bear market and the start of the comeback of bulls.
We'll see about that, CJ. Well, just one point I would like to make, the sequential decline in occupancy rates was also because of the Omicron wave in the fourth quarter. That's one. The rates have since gone up. Secondly, you mentioned about, high gross debt. The company itself has said that, at 30 lakh debt per room, it is still among the lowest. And at an average room rental of about 4,500 in Q4, and it's gone even above that in this quarter. I think it's not such a bad number.
Well, Santo, my last point on Lemon Tree, I would like to lean on what IDFC Securities had to say, who have a hold rating on the stock. They say that after about 50% returns in 2022, gains in 2022, the stock has just so much limited upside. Even if you account for the entire growth guidance and the overall improvement in occupancy rate as well as room rentals, there is just very little upside left. So probably if you were to enter the stock at this point, Santo, you're not going to end up making too much money, And probably if I go short now, I will probably have better returns than you do.
One of these days, I'm tempted to put some money on the table and take you on. Anyway,
that said, my last stock on my list is Nahar Poly Films. This is a micro cap stock, about 1,700 crores of market cap. Now, the March quarter earnings was spectacular for the company, and that gives me quite a confidence for how the FY23 performance is going to be. If you look at the net profit as well as the sales of the company, they nearly doubled on a year-on-year basis, as well as improved on a sequential basis as well for the company. Lastly, if you look at, the Nahar Poly Films is part of the entire textile theme that I have been talking about. Now, textile exports were spectacular in FY22, the highest ever or record exports that we have seen in value terms in FY22. And for me, the company will benefit from higher export demand as well as the strong pricing environment as well. I mean, cotton prices are higher, but these companies have been able to pass on those prices quite easily to the end consumer, and therefore be able to protect their margins, if not improve them. So quite a small cap stock looking quite good.
Okay, just an observation here, CJ. This is one segment for some reason, has never seen institutional interest. Now, even in the case of Nahar Poly Films, 100% compounded growth in earnings over the last 3 years. Stock price has gone up some tenfold in the last 3 years, and still you don't have any institutional investors showing interest in the stock, and that seems to be the case with most companies in the
Santo,
segment, except for Polyplex.
Yeah, I think probably, Santo, that is the sign of lack of jigra, if I can call that, or cojones, or if I can call that, on part of institutional investors. Probably because they just don't want to be caught in the liquidity trap. I mean, let's not forget that small cap also means low liquidity, and a lot of these institutional investors want to have that, because see, when an institutional investor will buy a stock, he will not buy 5,000 shares or 10,000 shares, right? He will end up buying 100,000, 200,000, maybe 500,000 shares. And when he wants to probably book profits after, say, a 3 to 5 year, return, good return trajectory, the moment he goes to the market to sell 300, 5,000, he will just bring down their stock like anything, and that will lead to a lot of market risk for him. So I think probably that is why they want to wait for the stock to, probably enter the mid cap or in that sort of trajectory where the liquidity also expands. Maybe the company will do some stock split, bonus issue. So yeah, I mean, probably that is the reason, but that does not mean that these stocks are not worth buying, especially for retail investors out there.
Well, my closing points on Nahar Poly Film, if you look at the key balance sheet metrics, cash flow, it was operating cash flow negative to about 144 crores during FY22. Debtor days has gone up, that's okay. Inventory has gone up from 40 to 75 days, and cash conversion cycle, which is the time the company takes to convert its goods into cash, is risen to its highest in 7 years to about almost 3 months. Now that's quite a big jump. Also, working capital days have risen sharply again from 16 to 57. This has not been the case with many of its peers, right? So there could be some reason why institutional investors are staying from that. And also, if you look at the stock, it has come off quite a bit. So maybe you're getting into the story at the wrong time. The best may already
No, I think, Santo, the correction is actually a good point, especially on the back of the March quarter earnings, because the correction has happened in line with the entire market. I mean, we know what has happened in the small cap space. The average decline has been anywhere between 35 to 40% for a micro cap or a small cap company. So I would not read into the correction to suggest that the fundamentals of the company are deteriorating or are going south.
Stock is up about 2% already. Yeah. Okay. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it. Please do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and the Moneycontrol app. We will catch you live again at 3 p.m. with all the day's action. Till then, have a great trading session.
Have a nice day ahead.